For as long as most of us can remember, finance has been a world of dashboards, alerts, and, well, waiting. We're constantly monitoring our wealth, but we, the humans, are always the bottleneck. You see an opportunity, you get an alert, but you have to be there to manually pull the trigger. Today, we're diving into something called AgentFi. And trust me, it's a fundamental shift that really does mark the end of this manual era.
Just think about it. On one side, you've got the old world. You spot a perfect market dip, but you're stuck in a meeting, or driving, or sleeping. By the time you get to your screen, poof, the opportunity is gone. But on the other side, you've got AgentFi. Here, the execution is constant, it's autonomous, and it's happening 24/7. That human bottleneck, it's finally being removed from the equation.
So what is this thing exactly? Well, AgentFi is basically the fusion of two powerful technologies, agentic AI and decentralized finance. The best way to think about it is a move from a read-only experience, where you're just looking at charts and dashboards, to an active, write-always operation, where your strategy is constantly being written, executed, and optimized right on the blockchain.
And let's be absolutely crystal clear about this. This isn't just about deploying a simple script or another trading bot. No way. We are talking about deploying digital fiduciaries. These are autonomous, non-human entities that you actually entrust to manage your capital and execute complex financial strategies on your behalf. It's a whole different level.
All of this brings us to a really pivotal moment, what we're calling finance's automation moment. This is where the very DNA of how we interact with our money is being rewritten.
Okay, let's really dive into this, because this distinction is absolutely critical. A traditional trading bot? It's purely reactive. It follows super simple if-then logic. If the price of asset X hits Y, then sell. That's it. But a financial agent, it's proactive. It pursues goal-oriented logic. You give it a high-level goal like, hey, maximize my yield but keep my risk exposure low, and it actually figures out the best way to achieve it.
So, how does it actually pull that off? How does it work? Let's pop the hood and take a look at the anatomy of one of these new financial agents.
So every agent is essentially an autonomous wealth engine, and it has three core parts. First up is the market listener, which is like its eyes and ears, constantly scanning for data and opportunities. Then, in this right here is the real game changer, you have the reasoning core. This is the brain of the whole operation. It's where it assesses probabilities and makes actual strategic decisions. And finally, you've got the execution wrapper, which takes that decision and makes it happen on the blockchain.
Let's look at a real-world example. Its first big function is something called autonomous arbitrage. This is where agents find and exploit tiny, fleeting price differences between different markets, something that happens way too fast for any human to consistently capture.
Now this is what's so interesting. A simple bot just sees a price gap and it acts. But an AgentFi agent, using that reasoning core we just talked about, analyzes multiple factors. It's not just the price gap. It's looking at transaction costs, potential slippage, liquidity depth, the whole picture. It doesn't just see an opportunity, it calculates the probability of success before it ever commits a single dollar.
Okay, the second key function is something many people have called the holy grail of passive wealth management, and that is autonomous tax loss harvesting.
And this just brilliantly illustrates the agent's power. It's continuously monitoring your portfolio 24/7. When it spots a losing position, it autonomously sells it to create a tax deduction that can offset your gains. Then, and this is the clever part, it immediately rotates that capital into a similar correlated asset to maintain your market exposure, all while strictly, and I mean strictly, adhering to complex compliance rules like the wash sale rule. This is an incredibly sophisticated strategy running constantly without you lifting a finger.
Now, I know what you might be thinking. This sounds incredibly powerful, but how does it all stay safe and under control? Well, that brings us to the critical concept of governance and human oversight.
See, in the world of AgentFi, deployment is less about writing thousands of lines of complex code and more about something called policy specification. You're not programming a trade, you are defining a safe operating space. Think of it like a digital constitution that dictates exactly how your capital can, and more importantly, cannot be used. So for example, you might set up these decision boundaries for your agent. You could say, okay, a maximum drawdown of 5%, a moderate risk tolerance, and you're only allowed to operate with stablecoins. You set the goal, in this case, optimize yield, and the agent then gets to work within those strict boundaries that you've defined.
So the crucial point here is that this is not some set-it-and-forget-it system, where the AI has total, unchecked control. It's human-in-the-loop governance. We, the humans, set the big-picture strategy and the critical guardrails, and the agent handles the high-frequency, complex execution inside that safe space we created for it. And these guardrails form a really robust protective layer around the agent. They can be technical, like setting hard limits on transaction fees or ensuring there's enough liquidity before a trade is even attempted. And they can also be procedural, like requiring your direct approval for any transaction over a certain size. It's all about layers of safety.
The technical magic that makes all of this happen is a concept called tool use. So you set a high-level goal, like optimize yield. The agent's reasoning core then translates that human intent into a series of precise machine-readable actions. And then it uses its tools, things like APIs and smart contract calls, to interact directly with DeFi protocols to get the job done. It's a translator between your goals and the blockchain.
This brings us to our final section, where we're going to zoom out and look at the bigger picture and the rise of a totally new role in finance, the agent architect.
So at a macro level, when you have millions of these agents all operating at once, they create what's being called a high-efficiency bazaar. Those little market inefficiencies that used to last for minutes or even hours, now they get closed in milliseconds. This actually makes markets more stable, but it also makes finding that market-beating alpha nearly impossible for a manual human trader.
And what this does is it forces a fundamental shift in our own identity as investors. In this new paradigm, you're not really an active trader anymore, trying to time the market day in and day out. You become a manager of managers, overseeing a portfolio of specialized, autonomous agents that are all working for you.
This quote really just sums it all up perfectly. Your value in this new financial world isn't about your ability to pick the next hot stock. Your value is your ability to architect, deploy, and govern a digital workforce of autonomous agents. So we'll leave you with this final thought to chew on. The defining question for the investor of the very near future is changing right before our eyes. It's no longer going to be, what should I buy? But rather, how many agents do I have working for me right now?